Good afternoon, ladies and gentlemen. It's a pleasure to be here and also a pleasure to continue the Bright Spots theme from a haircut department. But I'm going to talk to you now about the data before, as mentioned, I hand over to my friend Olivier Petit, who's going to talk about the opportunities, challenges, and success stories of Africa. So this will be the agenda for today. I'll look at Africa in a global context. Before we drill down and have a look at market-specific data, we're going to focus in on 5 key countries as well. Look at brand development, following on from the last session that we just listened to, before finishing with a look into the pipeline as well. So Africa in a global context. This first chart shows you year-end 2020 occupancy levels, both standard methodology, just open properties, as well as total room inventory methodology, which looks at the total supply. And what we can see is that Africa ultimately is one of the laggards. Along with Europe, along with Latin America, Africa was impacted quite significantly, of course. And moving through to July of this year, July year to date, you can see that pattern is continuing. Whilst, yes, occupancies have increased a little bit, ultimately Africa is still one of the laggards. Now, the question for me is obviously why. So I would put that widely down to 3 areas. The first one being demand. Now that may seem like an obvious statement to make, but ultimately where we've seen recovery thus far has been from leisure demand and domestic demand. And a large number of African markets, of course, are reliant on international demand and also corporate demand. So the demand mix has changed. Secondly, government restrictions. We all know that the vaccine rollout in Africa has not been as fast as in other parts of the world. And ultimately, there are still a lot of restrictions on traveling to Africa. I'm from the UK, and as of last week, 26 African countries were on the red list. Effectively, half the continent is out of bounds. So we need that to change. And then lastly, airlift. Really important. Again, globally, we've seen drive-to destinations really recover a lot more speedily than others, but ultimately African markets are not drive-to markets. So we need that airlift to come back and come back as soon as possible. But if again we compare globally and look at occupancy on a long-term trend, you can see, as Robin mentioned yesterday, the US, the Middle East getting back up to 2019 levels, China diving as a result of the Delta variant, and Europe had a great summer. But Africa, you can see there, steadily moving ahead. So it's moving in the right direction. And if we look at that same chart for average rates, again indexed on 2019, we see a similar story. And actually over the last 6 weeks or so, this is daily data up until the beginning of the month, we see Africa as a whole, average rates back up at 2019 levels, which is obviously a great news story for the continent. So let's continue in that vein now and have a look at market data overall. And the first chart, 10 major African countries, occupancy indexed on 2019. And you'll see there the title, Egypt, Ethiopia, Nigeria leading the way. And those are 3 of the 5 stories that I'll come on to more in due course. But ultimately, most of those countries now bunched around the 60% of 2019 levels from an occupancy perspective, so quite similar to the levels we're seeing in many countries in Europe. There is one laggard there. You can see there in orange, Botswana has had a bit of an outbreak from a case perspective, so unsurprising to see that market trailing. But if we drill down now and have a look at the cities, again, this is year-to-date July, which was the last full available month we had from a presentation deadline perspective. None of the markets are over 50%, which isn't really surprising in the scheme of things. A little bit stronger in the West, stronger also in Egypt. But if we look at July as a standalone, we start to see some of the patterns emerge that, again, I'll talk about momentarily. We've got some improving markets there again in the West Africa, Dakar looking good, Egypt as well starting to recover, and the Seychelles. Robin mentioned yesterday, pent-up leisure demand. And you can see that from a high end going into the Seychelles and some good performance there. And our August data, which has just come out, also looking very similar from an occupancy perspective. Average rates, July year to date once again, and you can see most markets still not quite up to 2019 levels. Those that are, leisure demand driven. Quite obviously, you see there Seychelles, Marrakesh, Sharm. And again, if we look at July alone, we can see more of those markets getting back to 2019 levels, but that's really, as I say, increased in the last 6 weeks or so. But if we look at 5 stories from around the continent and visit each corner of the continent as well, I want to start in the north, and I want to start with Egypt. Egypt's open for business, and we can see that it is the top performing market in Africa currently. From a vaccination perspective, the Egyptian government, they prioritized hotel workers in the Sinai on the Red Coast, really helping to make tourists feel more comfortable. The Russians are now allowed to go back to those markets as well. So positive across the board. Cairo in the lead, however, but that market, of course, benefits from some domestic corporate business as well as the leisure business with the pyramids in Giza close by, of course. And just last week, the UK, for example, put Egypt on the safe list. So we should see this trend continue. When we compare to 2019 levels, though, Sharm slightly closer to the prior peak than Cairo, but both hovering around the 80% mark. So Egypt on the whole is doing relatively well. Moving across the Maghreb now to Morocco, and similarly to Egypt, it's reopened to tourists on the 15th of June, as you can see. And we see a pattern in Morocco that we've seen across the world. It's the seaside, it's the sun and the sea that people are looking for. Agadir and Tangier performing above where you may expect to be recovering more quickly. Marrakesh, which is actually suffering a little bit more. So that leisure demand very obvious in Morocco. And again, if we look and compare to 2019, ADR's back up above the level they were at across the country, and occupancy is about 3/4 of the way. So again, Morocco, I think, is a pretty good success story when you look in context. Let's move now to the west and to Lagos. And as was mentioned on the previous panel, Lagos had a pretty good few years up until 2019. But if we look at occupancy last year, in the depths of the pandemic, it never really dropped below 40% because the oil business, that long stay demand, constantly there in Lagos. And as such, we've started to see again things push back. The oil business combined with lesser restrictions in Nigeria helping from a domestic demand perspective. But one thing that we will look at from a rate perspective there, we can see the devaluation of the Naira and inflation really pushing up rates in local currency when compared to US dollars. Now moving from the west to the east and Addis Ababa, and whilst oil keeps Lagos moving, diplomacy keeps Addis moving, the diplomatic capital of the continent, of course. And again, when you look at occupancy there, the green line indexed to 2019, it never really dropped that far when you compare it to many other markets. Another thing to watch, again, inflation. You can see just how quickly local currency rates are shooting up. And if we look at Nigeria and Ethiopia, we can see 20% inflation in Ethiopia, 17% in Nigeria, significant numbers, likely to be in double digits for the foreseeable future as well. But what we do see in these two countries, when we look at our pipeline, and I'll come on to it more, but Lagos and Addis Ababa are the two cities, predefined STR markets on the continent with the highest percentage of existing supply in the pipeline. And you can see there Addis way out ahead, and I'm going to touch on that more as we move through the deck. Finally, moving to the south of the continent, we've had 4 relatively good news stories. South Africa, though, struggling a little bit more. COVID hit hard, as we know, strong lockdowns, recent civil unrest, and you can see across the classes, occupancy relatively muted. But when we look at rate, it's the lack of international demand driving rate in luxury and upper upscale properties, which stands out quite significantly. And then from a market perspective, Limpopo, which is dominated, of course, by the Kruger National Park, domestic leisure demand, not significant, of course, but helping that market perform a little bit better than Johannesburg, Cape Town, or Durban. So the south, a little bit more muted, but certainly some positivity coming out of the rest of the continent. Now I'd like to change tact and following on really from our last panel, talk a little bit about brand development, which to me is something that's been very interesting over recent years. And for those of you that have attended AHIC. You might recognize some of these first slides, but I think they really do help to put things in context. And the first one here is just the sheer scale, the size. It was mentioned on the previous panel. You can fit China, the States, India, Japan, and most of Europe into Africa. But there are only 5,000 hotels, which is 200 times fewer than the number from the countries that can fit inside the continent geographically. And where are those rooms? Well, there are only 4 countries with more than 50,000 keys: Egypt, Tunisia, South Africa, and Morocco. And there are only a further 5 with more than 10,000 keys, those being Ghana, Nigeria, Algeria, Kenya, and Mauritius. And when you compare those kind of numbers internationally, you see similar numbers in countries such as Ecuador or Latvia, Lithuania, Azerbaijan, which really puts into context the supply situation in these major African markets. And this is a slide that I first presented way back in 2013, because 8 years ago, there were a full 18 countries with no brands present at all across the continent. Today, that number's just 7. And if you look at those 7, only 5 have no brands at all, because Azalai, the Malian brand, is present in Mauritania and in Guinea-Bissau. So we can see the expansion of brands across the African continent over recent years. And I thought to look at this in another way as well, choosing here 12 major markets in emerging Africa. And looking back in 2015, we can see the supply picture here from a branded perspective. Some had none, Niamey, Conakry, for example. Others only African brands, such as Gaborone or Kigali, and others with only 1 international brand. So how has that evolved? If we move to 2016, we can see then Conakry got their first branded supply with Sheraton and Noom. Kigali, the first international hotels, the Radisson Blu and the Marriott. We were at the Marriott for the opening party during AHIC in 2016. Moving on to 2017, Dakar getting 2 new properties. 2018, Accor developing 3 hotels in the Ivorian capital, Abidjan. 2019, we saw the first branded supply into Niamey in Niger, with Radisson and Noom opening. And then even during the depths of the crisis, we still saw new openings in markets such as Bamako. So although it's coming from a low base, in just that 5-year period, branded supply increased by 53% across these cities. And if we look this year, we've still seen some new openings, as you can see there in Abidjan. 5,000 new rooms opened this year to date in Africa. Not huge, admittedly, but steady. So that's what's happened. Now let's look at the future, again following on from what our colleagues were talking about earlier and looking at the pipeline. So these are the top markets from a pipeline perspective. The normal suspects: Cairo, 7,000 keys, then you've got Addis, Nairobi, Lagos, and Algiers. So as you'd expect, but then if you move a little bit further down, you will see some names that don't necessarily trip off the tongue. Cotonou in Benin, for example, 4 properties in the pipeline there. There's Accor, Best Western, Noom, Wyndham, all developing. Antananarivo in Madagascar as well. Radisson, Accor, Marriott, all developing again. So all across the continent, we're seeing this development. But one market I think deserves a special mention in terms of what's happened, and that is Addis Ababa. So back in 2007, there were just 3 branded hotels there: Tulip Inn, the Sheraton Luxury Collection, and the Hilton, which opened way back in 1969. But as you can see, since then, year after year after year, it's a who's who of the international brands opening their doors in Addis. And that is not ending anytime soon either. These maps taken from the CoStar platform, we can see there these silver pins represent a pipeline project all across Addis, 4,500 keys. And then also across regional Ethiopia, a further 2,000 keys. Marriott, Accor, Radisson, Hilton, Wyndham, all opening their doors. So really quite staggering, and something that 10, 15 years ago simply unthinkable. And you'll notice also Djibouti on the map. We've got projects in the pipeline there, including, of course, the Fairmont that was signed yesterday. So to finish, before I hand over to Olivier, my summary. COVID has hurt, and it is going to take a long time to recover, as we well know. But vaccines are going to be key to that recovery, as will airlift, to get that international demand back on the ground in Africa. But the long-term opportunity remains. That hasn't changed. Africa rising, all of the things that we've been talking about for the last decade are firmly still in place. But of course, the pipeline supply growth, when it comes, is fine, but if it all comes at once, it can cause some challenges. But with that, I'm going to say thank you very much for your time. I'm going to hand over to my good friend Olivier Petit, who is a partner in Extenso, and say thank you very much indeed.
Thanks.
Thank you.
Thanks, Thomas, for all these precious figures. As always, it's always a pleasure. We are very delighted of our partnership. After all these figures, I will introduce you a few trends regarding the African market. I won't spend time about the COVID crisis. Of course, we talked about this a long time during this conference. And we consider that there are a few matters of concern regarding this continent, Africa. This matter of concern will remain in the political turmoil and economic uncertainty, which remain part of some countries' issues as in terms of attracting both tourists or investors. This has also some impact regarding the national demand and the domestic demand in some of the in these countries are quite low, and of course it has some impact on the return of investment of the industry. To develop national demand, there are a few breaks in the market. First of all, the maturity of hotel and tourism markets, the adaptation of the supply regarding to the demand is one of these concerns. The purchasing power of the middle class is also something which makes a very strong impact on the activity. The link between economic development and tourism flows, plus the development pipeline, which was mentioned a few minutes ago by Thomas. If we have this matter of concern on the continent, there are also a lot of opportunities there and which could be developed. Part of the solution remains in adapting the hotel to the demand, to position and adapting hotel positioning to rise domestic middle classes and national demand. If we consider some new brands like Yas, Onomo, Azalai, which started their development a few years ago, we see that these brands are fully adapted and fully developed to match these African domestic markets. And it makes part of their success on the continent. Introducing new lodging product and servicing will create the demand, part of it. If you consider, for example, the market of apart hotels, which is very developed in the European and globally worldwide, you attract some new segments in terms of tourism, and they are almost not present on the continent. This is probably one way which could see that adapting the lodging in supplies is one way to develop intra-African tourism and also helping the industry to recover and in the midterm and of course to favorize some good return on investment. Countries have to structure tourism and offer in line with national demand trends, and it will impact the hotel industry. If we consider two different examples, Morocco has a very diversified supply, both in terms of hotel, in terms of tourism supply. you have some beaches, patrimony, you have a lot of things to do in Morocco, and it makes part of the success. You also find quite a huge variety of assets in Tunisia, but the development was mostly focused regarding large beach hotel, all-inclusive, and it doesn't fit with the demand of the local demand and Pan-African demand. So, and nowadays, even with international demand trends, it doesn't match anymore. So, the development of tourism remains an ecosystem in which everything has to be developed. This ecosystem could be developed thanks to major investors, and I think about all the funder bodies like World Bank or Europe or FMI, which could assist in some developments like in Côte d'Ivoire, in Benin regarding the development of memorial tourism. If you create this ecosystem, you will be well positioned in order to welcome some private investment, in order to welcome some tourists, because you will have some activities and you will have something to do there. So, who will invest? All these funding bodies will have a very important strategic role in Africa. They will help to develop all the ecosystems. They will help to develop the structure of tourism. They will help to develop the governance as well. And then you will have some private investor who will be able to invest in infrastructure and, of course, regarding hospitality. Mr. Barakat, the Smith CEO, was speaking yesterday, and he also insisted on the climate and investment, which will be a very good way to attract investors. And of course, if you consider Morocco development and if you consider the Algerian potential, pulling out your money from Algeria remains quite difficult, while Morocco has made significant efforts, and nowadays it doesn't make no problem. If you consider also a few, not success stories nowadays, but future success stories, at least I hope, I would mention two examples. In Dakhla, Morocco, south of Morocco, next to Mauritania, you have this small village, and it was very known for a kite surf spot. And during this COVID time, there was a tremendous attractivity of Dakhla. Dakhla was very well positioned, of course, for this niche market on an international basis, but it was also a good spot for Moroccan people who discovered also this part of Morocco. You have a lot of assets, natural, heritage, and you have also some development, structuring the market in terms of activities and whatever. Hotel occupancy can exceed 80% on a yearly basis. Of course, it's quite small hotels now, but it's a very good sign in this period, and it's also a very good example of a mix of the public and private sector who invested a destination to create a trend, to create a new resort. We really think that Dakhla is one of the destinations who will benefit from the maximum regards in terms of international but also domestic tourism in Morocco in the coming years. Tabarka, Tunisia. Tunisia has a lot of assets, but the way they develop tourism with a focus on littoral and beaches was something very good at the time, and nowadays, with no reinvestment, with a 10-year crisis in the country, it's very difficult. Tabarka suffers also from an accessibility which was quite constraining the recent years. But nowadays, you will find some project and some project which were mentioned during the previous roundtable. It will be a mixed use. You will find some activities, you will find different types of lodging, you will develop some hospitality for domestic demands, tourism, but also for Algeria, which is 20 or 30 kilometers away. And if you develop some sustainable development, if you focus on new trends, you will probably have something very interesting on something like a greenfield in Tabarka on the land plot which will be developed. So we can be very optimistic, I guess, regarding African development. Regarding countries which are not developed yet, you mentioned a few of them, Thomas. Regarding countries which has already known some success and huge development, but we need to have some groups who continue to develop hotels considering the domestic market and its specificities. We need to have a development which is adapted in terms of budget, meaning budget hotels and mid-scales, and to find sufficiency of financial resources remains an obstacle, but financial body, international and Pan-African funds will probably match it. Merci.
Thank you, Olivier.